Hey guys, welcome to the Max Invest YouTube channel, and today we are looking at two of the biggest initial public offerings of 2021. These companies have sold for very high prices and sold shares at prices people did not expect they would sell at. If you enjoy the video, remember to like and subscribe, and remember nothing in this video is financial advice and you should always do your own research. Now, the first company we are going to look at that just IPO'd a day ago is Coupang. Now, Coupang went public on March the 10th on the New York Stock Exchange. The company's begun trading at $63.50 a share, giving it a market capitalization of $102 billion right at the beginning of the trading day. This is a massive amount for the company, and this is way bigger than what they even expected. The company was valued at just $8 billion in 2018, and they were expecting about $50 billion. However, the shares did slide until the end of the day, as it was too much of an initial jump to a market capitalization of $84 billion at $49.25 a share. This is still above what the company initially priced their shares at $35 per share. So as we can see, this company has traded at a massive valuation right off on the first day, despite the decrease in the value of its shares. Now, what is Coupang? Coupang is the largest IPO so far of 2021. It is an e-commerce company located in South Korea and was founded in 2010. It is ranked number 2 on CNBC's top 50 disruptors list, and it is expected to grow substantially over time, with total e-commerce spending expected to grow from $128 billion in 2019 to $206 billion in 2024 in South Korea alone. Now, Coupang is essentially, you can think of it like the Amazon of South Korea. It does what Amazon does with rocket delivery, where it promises deliveries in 24 hours for all people located within South Korea. It operates 982 warehouses, and this is up from 515 the previous year. It also owns one of the most popular South Korean apps. Coupang also has a very ambitious CEO who has founded many other companies and is a Harvard dropout. However, he believes Coupang is his best company to date, and they basically deliver anything related to e-commerce, very similar to Amazon. Now, Coupang are not only located in South Korea, however, they are still primarily located in South Korea. Coupang do, however, deliver to China, the USA as well. So it does show that Coupang are delivering to multiple countries around the world, which expands their growth prospects a little bit out of South Korea. South Korea only has 51 million people, which isn't actually that many people. So it's good to see that Coupang are delivering to other areas of the world with billions of people in those areas, so they can actually continue to grow from their already large numbers into the future. Now let's take a brief look at Coupang's finances. Coupang nearly doubled their revenue from 2019 to 2020 to $11 billion. Of course, a lot of this was accelerated by the COVID pandemic, with many people staying at home, and instead of going outside, they're getting all of their e-commerce needs from Coupang and getting it delivered to their door as they sit at home. Net sales increased 91% in 2020, and Coupang posted a net loss of $475 million, which is a lot better than previous years where the net loss was nearly $1 billion. They are currently not profitable. However, this is similar to nearly every e-commerce company. Even Amazon was only profitable just a few years ago, and by the time Amazon became profitable, it was already one of the biggest companies in the entire world. Coupang has 19.2% of market share in South Korea's e-commerce market, and it is the biggest player in South Korea's e-commerce market, which is quite a good sign, and it should maintain this market share over time, as a lot of people in South Korea have said the first thing that comes into their mind when they want to order something is Coupang, and that brand advantage will be good for the company going into the future. Coupang have EBITDA of $239 million, and they had 14.8 million customers at the end of December 2020. Now, this brings us to valuation. Coupang only have 14.8 million customers, however, they're an $84 billion company. Now, there are other e-commerce companies like the Mercado Libre e-commerce company. I'm sorry if I mispronounced that, I'm not quite sure how to pronounce it, but that company operates in South America and operates throughout South America. It has a similar market capitalization of Coupang, however, it has over 70 million customers within it. So as you can see, Coupang does actually look pretty overvalued, and most of its customers are still in South Korea, which is a little bit restrictive, and I probably won't be buying into this IPO for that very reason. Now, the next big IPO of 2021 is Roblox. This is one of the biggest companies to go public, however, is not quite as big as Coupang. Roblox IPO'd after a record year in 2020, where many people stayed at home and played the video game during the pandemic, accelerating its growth to new heights. Let's first take a look at IPO information. On the first day, Roblox's stock price reached $69.50, which is a massive increase over the initial offering of $45 a share, showing many people are very excited about this company. Now, this equates to Roblox having roughly a $39 billion market cap. This is a massive market cap for a video game company, and Roblox is actually trading at quite a high value already on the first day. Roblox is a video game company founded in 2004 that obviously owns the video game Roblox. It was the largest mobile game of 2020, and it is primarily a free game that is made for younger children. Roblox can be thought of as something similar to Minecraft. I'm not quite sure on the specific details of the game, as I actually haven't played the game. However, I do know it is very popular amongst younger kids. Roblox basically makes money through users purchasing Robux. Many people get confused as to how free games like Clash of Clans and others can make significant amounts of money. And this is because by making the game free, they get a ton of players, and then these players eventually get quite addicted to the game, play tons of the game, and they end up spending hundreds and hundreds of dollars over the years on in-game purchases, making the companies significant amounts of money. Now, let's take a look at some of Roblox's financials. Roblox has 32.6 million users every day. This is a massive number of people who are on the game being daily and active, and is up 85% from the previous year. Revenue also jumped 82% in the year to $924 million. Roblox posted a net loss of $253 million relative to $71 million the previous year, and a larger net loss can sometimes be expected with companies that are attempting to rapidly grow over time and are having big growth years, as they need to spend more money to simply do this. The average user spends 100 minutes a day on Roblox. When you think about the 32.6 million daily users for Roblox, this means a ton of hours of Roblox are being consumed, and means Roblox will be more profitable in the future, with many people spending a lot of money on the game as they are dedicating so much time to this game. So as we can see, Roblox has pretty good financials. However, you will notice the revenue is under $1 billion for a $39 billion company, which is a red flag to me, especially since 2020 could have been one of their better years with the pandemic, and they may not have quite as good of a year this year, or not quite as good growth like the 85% growth they saw 1 year ago. So it is a bit of a red flag that this company is trading at such a high valuation right now. Another interesting thing is Cathie Wood bought 500,000 Roblox shares on the day that Roblox opened. This shows Cathie Wood believes that there is something in Roblox. I would be interested to see what her bull case for the company is. However, this is an interesting statistic about the company. Now, we need to wonder, is Roblox actually at a fair price right now? And I overall don't think, as we can see, Roblox hasn't made quite enough revenue yet. It is trading quite richly, and many people bought their shares on the instant the company IPO'd. So if I were looking at Roblox, which I'm not really, but if I were, I would probably be waiting a little bit before buying this. Of course, this isn't financial advice, and you should do your own research. However, I think I've ruled Roblox out after the IPO. If you enjoyed the video, remember to like and subscribe. And thanks for watching the video.